Hello, am I audible? Am I audible? Am I audible? Hello, am I audible? Today we are going to discuss about something important which is part of our syllabus, that is BA second year economics semester 4, public finance and international economics. In this, in the earlier class, we could able to cover so many important concepts. On the first day itself, we were discussed about public finance nature, public finance scope, principle of maximum social advantage, public revenue sources, public revenue classification, canons of taxation, impact of taxation, incidence of taxation, effects of taxation. That is in the first day, that is on 26th, the first day class. And another day, that is on second day, we could able to cover very important topic, my dear children, public expenditure and public debt, in which topic we could able to discuss in detail about public expenditure classification, public expenditure principles, determinants of public expenditure, effects of public expenditure. After that, we, on the second day itself, we could able to cover nature of the public debt, sources of public debt, classification of public debt, effects of public debt. In addition to that, how to repay public borrowing, public debt by in an economy. That was the second class of us. Am I audible? Am I audible? Am I audible? Hello? Am I clear? Am I audible? Dear children, second year BA Economics semester 4. On third day, in the third class, class 3, that is on, I hope that is on Tuesday, we were also discussed about fiscal policy, federal finance, budget, budget concepts, budget types, types of budget deficits, budgeting in India, federal finance, central list, state list, concurrent list. All those were covered on the third class, that is on Tuesday. Our class was started on Sunday, that is on 26th, and 27th and 28th, that is fiscal policy, federal finance and budget. Yesterday, that is the fourth class of us. Actually, we are going to cover within the stipulated time, that is within the 6 classes, these topics to be covered, so that you are able to write your semester exams. And at the same time, I am giving ample of time to clear your doubts. That is, in the yesterday, we were having the class of international trade. In difference between internal trade and international trade, similarities between internal trade and external trade, trading principles, determinants of international trade, reasons for the international trade, role of international trade in the economic growth and development. My dear children, in addition to that, one more topic also we could cover yesterday, that is in the fourth class of us, that is terms of trade, gains from trade. Terms of trade as well as gains from trade. Now, today we are going to cover, in fact, 4 topics are there. Today, 2 topics, and tomorrow we will have 2 more topics. And today's topic is about BOP and BOT. What is BOT? BOT, balance of trade. What is BOP? BOP, BOP, that is balance of payments. If time permits for us, even we can discuss about the disequilibrium in the balance of payment, trends in the India's balance of payment. That also we can discuss. So first of all, let us have a idea on balance of trade. Am I audible, my dear children? Am I audible? If not visible, at least it's supposed to be reached to you. Children, are you aware of foreign trade, that is balance of trade? If not, today, after discussion of this one, you are able to understand concept of balance of trade. We are able to understand the concept of tariffs and quotas. We are able to understand types of tariffs, types of quotas also. We know the concepts of balance of trade and balance of payment. We can able to examine the effects of balance of trade. Not only that, we can analyze trends in India's balance of trade. Which factors are affecting the balance of trade? Endowments and productivity, trade policy, exchange rates, foreign currency reserves, inflation, demand. These are some of the factors, of course, affecting the balance of trade. When you see the recent trends in our balance of trade, growth of imports, growth of exports also there. But sometimes we are facing deficit in the balance of trade. So how to overcome those things? Balance of trade takes into account only those transactions of exports and imports of the visible items, merchandise items, goods only, means services are not taken into account in the balance of trade. It consider visible items of export visible items of imports. It is not considering the export or import of services like shipping, insurance, banking, etc. It is taking only visible items into account, export of goods and import of goods. So that's why we can say balance of trade is showing difference between value of goods exported and value of goods imported. This is about the balance of trade. It is different from balance of payment. The balance of payment, we are not only taking the visible items, we are also considering invisible items also. Means goods and services, exports and imports. We can compare and contrast this balance of payment and balance of trade. Balance of payment includes all transactions related to visible, invisible capital transfers. Whereas balance of trade includes only visible items. Balance of payment always balance. But balance of trade sometimes favorable, sometimes unfavorable. Balance of payment affected by foreign lenders, economic policy of the government, prices of goods manufactured in our own country. And when it comes to the balance of trade is affected by cost of production, availability of new materials, and exchange rate also. This is the these are the difference between balance of trade and balance of payment. In a nutshell, with one word, we can say balance of trade consider only visible goods export, visible goods import. There is a, whereas balance of payment consider visible items, invisible items like services, insurance, transport, communication, banking, etc. In addition to capital transfers also. Now, which factors are going to affect the balance of trade first, and which are affecting the balance of payment? First, which factors are affecting the balance of trade? Let us see. Factor endowments and productivity. Factor endowments include labor, land, capital. I mean workforce, land quality, availability for the production, and production capacity. These are going to decide the balance of trade because it gives manufactured goods only, na? Either industry or land, that is agriculture commodities, isn't it? So this is the first one which is affecting the balance of trade. Even trade policies also affect the balance of trade. Policy that if restricting the imports or exports, that time definitely it affects. Another thing is exchange rate. What is exchange rate? When we are expressing our domestic currency in terms of other currency, then it is called exchange rate. For example, we are paying 72 rupees for the dollar. Means we are expressing dollar price in terms of our domestic currency, that is rupees. That is exchange rate. This exchange rate is determined by various factors that we are going to discuss tomorrow. What is exchange rate, where it is decided, what are the factors going to decide, and which type of exchange rate is good and which exchange rate we are following. That we can have a detailed discussion tomorrow in the last class. But today, what I would like to tell, the exchange rate is also affecting the balance of trade. When the value of currency is higher in relation to other currency, it's said to be overvalued. If value of currency is lower in relation to other currency, means our currency is undervalued. Overvaluation or undervaluation not good, of course. Sometimes undervaluation makes favorable balance of trade, encourage the export, reducing the imports. So in that way, exchange rate is also affecting the balance of trade. Next, another factor is affecting foreign currency reserves. To compete effectively, extremely in the international market, nation has to have so much of foreign exchange reserves. Then only we could able to compete. So that's why the exchange reserves also affecting the balance of trade. Another factor is which is affecting the balance of trade is inflation. Price lower or higher of the currency. Definitely, it is also affecting the balance of trade. Even demand for that product also affect the balance of trade. My dear children, when we discuss about this much about the balance of trade, what is the trend and what is the situation? What is the position of balance of trade in India? The empirical evidence data given by economic survey reports shows that in the first two decades, that is from 60, say, later 1980, foreign trade is increased almost 6 times increased. However, after 81, 81 to 91, 91 to 2001 also increased, but not 6 times, just 4 times only. The marginal increase because of higher rate over the years since 1961. I mean to say, this figure shows that foreign trade was some variation is there. When come to the imports, the imports increased almost 3 times during the 60s से लेकर 80. Imports further again increased 2010 to 2020. Within the 9 months, so much increased. So, imports have been increasing in India due to several factors. It may be the reason of industrial input. It may be the reason of crude oil imports. It may be the reason of import of food grains. It may be the reason of edible oil. That's why only nowadays most of the state governments are encouraging palm oil cultivation and giving the subsidies also because edible oil is supposed not to be imported. So in this way, the price hike might be the reason for the growth of more imports. When come to the exports concern, over these many years, exports were increased, but not much more. But recently, after economic reforms since 1991, the exports also increased, especially in the services that you know well. When come to the goods, not increased much. That's why only we are facing the deficit in the balance of trade. I am not saying that the deficit in the balance of payment. I am speaking that there is a deficit in the balance of trade, which consider only visible items export, visible item imports. Now, next topic is about the when you are speaking about this foreign trade, we are also supposed to discuss about the tariffs and quotas. What is tariff? Very simple. It is nothing but tax. It is nothing but a duty which is imposed international in the international trade when it is bordering, crossing the borders. Tariff is a very important instrument for the trade protection or trade liberalizing. Tariff can be classified into basis of four categories. Classification of tariffs, four categories. Let me tell you. One, export duty means tax imposed on the export. Import duty, tax imposed on the imports. Transit duty, that the transit duty imposed on the commodity crossing the international borders. The same tariff based on the quantification means based on the quantity. Specific duties, fixed amount of duty levied on the physical unit per meter, per liter, or per kilogram, like that. Ad valorem duty, it is common type. This is based on the percentage. That is fixed percentage. Another type of tariff based on the quantity, that is compound duties. This is ad valorem duty, that is just like a specific duty based on the commodity. Then next is sliding scale duty. When it is import, the first up to this range this much, this range this much, this range this much, like that it will decide. So same way, this tariffs on the basis of country also, it is there. Single column tariff. This is uniform rate of duty imposed on say all commodities irrespective of the country. Double column, that is different rates for the different commodities and different countries. Triple column tariff, this is usually levied three tariff rates: general, intermediate, and preferential. Am I audible, Nikhil? Nikhil, am I audible? Am I audible, Nikhil? So, single column, double column, and triple column tariffs. Another tariffs based on the purpose: revenue tariff, protective tariff, countervailing tariff, anti-dumping duties. All these are tariffs, that is taxes levied on the export or import. Next, about the another one is quota. How much quota to be exported, how much quantity to be imported. That is nothing but quantitative restrictions in the international trade. Tariff quota. Customs quota is widely claimed measure. Under this system, quantity of good is permitted to enter duty free. More than that, definitely charge will be there. Unilateral quota under this system, it fixes limit this much quantity to be imported. Bilateral quota under this system, quotas are set by negotiations between the different countries. Mixing quota, import licensing, like that different way of impositions in the international trade. I hope this topic is clear for you, so that I want to move on to the another topic, that is balance of payment, which we had a meaning and comparison with the balance of trade just now. But in detail, let us go and discuss about the balance of payment. That is in the black number 5. In this, we are going to have a concept, components, determinants of the balance of payment, reasons for disequilibrium in the balance of payment, trends in the India's balance of payment. This unit explains, makes us understand the concept of balance of payment. Identify the components of balance of payment. Examine the determinants of balance of payment. Lastly, we could able to understand concept of equilibrium of balance of payment, concept of disequilibrium balance of payment, reasons for disequilibrium of balance of payment. What is the meaning of balance of payment? Just now only I told you. All economies have cross borders transaction involve transfer of goods, services, funds, etc. Balance of payment is a statement which keep as a double entry bookkeeping. Record of all monetary, economic transactions between a country and the rest of the world, means with other countries. How company or individual or school or institution or firm maintain the transaction records, same way we have a record of balance of payment in which we are going to record of goods exported, goods imported, services exported, services imported, current transfers to the rest of the world, current transfers from the rest of the world, factor services to the rest of the world, factor services from the rest of the world, non-factor services to other countries, non-factor services to our country. All these are covered in the balance of payment. My dear friends, Kindleberger, Benham, Bose-Rushton given their own definitions of the balance of payment. According to Kindleberger, BOP, that is balance of payment of a country, is a systematic record of all economic transactions between our country and to the rest of the world during given period of time. When come to the in the words of Benham, balance of payment of a country is a record of the monetary transactions over a period with the rest of the world. the great economists who deal much more about the international trade, that is Bo Soderstrom, what he says, according to him, the balance of payment is nearly a way of listing receipts and payments in international transactions for a country. Very simple narration. So, my dear children, balance of trade consists of two now receipts and payments. Receipt side, what comes? Export of good. Payment side, import of goods. Receipt side, what happens? Export of service. Payment side, import of service. Receipt side, interest, profit, dividends received. When come to the payment side, interest, profit, dividends to be paid. Receipt side, unilateral receipts which we got a donation, gift, grants. Same way we are paying to others, that is unilateral payments, gifts, grants, donations. All these are come together is the current account. I mean, it consists of current account and capital account. The last one is called official reserves. In the capital account, what comes under this balance of payment? Foreign investments, receipt side. Investments abroad, payment side. Short-term borrowing, receipt side. Short-term lending, payment side. Long-term borrowing, receipt side. Long-term lending, debit side, that is payment side. Errors and omissions will be there both the side. The last one is called what to say, official resource. When a surplus is there, it will come to the official reserve. If surplus is not there, whichever the reserves are there, we take and put it to make the balance imbalance to the balance. That's why only balance of payment consists of below the line items, above the line items. Okay, like that. And accommodating items and adjust accommodating items. Autonomous items. In this way also we used to classify. The current account is, if it is not balanced, it may be balanced with a capital account. There also, if it is not balanced, we go with official reserves. With that, we go for balancing the balance of payment. Even then, if it is disequilibrium, then problem will be there. Why this disequilibrium happens? That also we will discuss just now. My dear children, the capital account used finance to deficit in the current account. Current account, if it is not equal, then to cover that deficit, we use capital account. In what way we can use this capital account? We may take loan, that is loans, borrowings from the abroad, investments from abroad, changes in the foreign exchange reserve, official reserve assets taking, something in that way we want to bring into the balance or equilibrium of the balance of payment. What are the determinants are going to decide balance of payment? Inflation, national income, government restrictions, exchange rate. These are going to affect the or deciding the balance of payment. Even then, sometimes we may face a disequilibrium. That disequilibrium is supposed to be bring into the equilibrium. That is also one topic with us, my dear friends. That is disequilibrium in the balance of payment. Trends, especially India's balance of payment. In this topic, after discussion, we could able to understand measurement of the balance of payment, determinants of balance of payment, which are deciding the disequilibrium, how to overcome, What are the methods to correct the disequilibrium? Also, we analyze the trends in the India's balance of payment. The measurement and determination of disequilibrium is by the way of autonomous items and accommodating items. You know well, autonomous items for profit motive, accommodating items just for the adjustment only. Autonomous receipts are visible exports, invisible exports. Payments are autonomous payments are imports and import of services, capital payments. Accommodating receipts are which are taken into account unequated receipts, accommodating unequated. In that way, we go for accommodating items. Okay. What are the different kinds of disequilibrium in the balance of payment that I would like to share with you? Stay with me so that you will get clarity. Different kinds of disequilibrium. Cyclical disequilibrium, just like a business cycle, depends upon the trade cycles, prosperity, depression, inflation, etc. That is cyclical. Secular disequilibrium, it moves one stage to another stage of development. Structural disequilibrium, this is due to structural changes it happens, that is structural disequilibrium. Temporary, it can able to overcome that disequilibrium may be because of natural calamities like a flood, drought, what to say, earthquake, or sometimes even war also. That is the temporary, but it can be recouped and recovered. Short-term disequilibrium. This is also for the little bit period only, maybe due to the interest rate or due to demand shortage or due to supply shortage or sometimes effective demand is lacking, like that it may happen. That also can be recovered. But long-term disequilibrium is not good. That was took place in India during the 1990s. To overcome that situation only, huge deficit in the balance of payment that time. Even no one country come forward to give loan to India. We are ready to borrow by mortgaging our gold also. Means international goodwill will loss. During the Chandrasekhar prime ministerialship, of course, that government was collapsed. Again, P.V. Narasimha Rao came to the power and he invited the Manmohan Singh, who was a RBI governor, and given him as a ministership of finance. These two great personality work together to overcome this long-term disequilibrium in the balance of payment and introduced economic reforms, which is known as liberalization, privatization, globalization. The fundamental disequilibrium also one, that is also long term only. This is fundamental or permanent disequilibrium. For that, generally, these Gulf countries used to face that to be decided and to overcome by changing their what you say economic policy only. Then actually this fundamental disequilibrium is different. That's why actually which causes or which reasons for this fundamental disequilibrium, especially developmental programs, demonstration effect, natural factors, cyclical fluctuation, inflation, flight of capital, globalization, growth of more population, huh? Political reasons, maybe political instability, etc. Maybe there is even sometimes social causes like preferences, fashions, and their religious superstitions also may be the cause for the fundamental disequilibrium. This fundamental disequilibrium must and should be corrected, but it is not so easy task to overcome the fundamental disequilibrium, unlike other kind of balance of payment disequilibrium. Here, how to correct in general these balance of payment disequilibrium are automatically it will, because when supply shortage is there, price will increase automatically. It give encouragement to the producer to produce again, increases the price will raise, like that it will demand, supply forces will automatically will correct the situation. And deliberate measures also mean, that is like a monetary policy, that is what to say, how you are changing bank rate, repo rate, reverse repo rate type. Internationally, if you are going with the devaluation or depreciation of currency and the exchange rate changes, that kind of will help us to overcome the disequilibrium in the balance of payment. Not only this, even sometimes not only monetary, even other like a trade measures are there, like import duties, export to promotion, encouragement to the foreign investment. Attach. That's why only when now we are encouraging the FDI, na foreign direct investment also, FFI, etc. Portfolio. So in this way we can correct it. Encouragement to the foreign investment, attraction to the foreign tourism. This will help us to overcome the disequilibrium in the balance of payment. Some social measures also to be taken up to overcome the disequilibrium in the balance of payment, such as uh, Swadeshi spirit helped us to encourage export promotion and import substitution also, isn't it? In that way, and make in India, made in India, such type programs, example. So anyway, let us note what is the situation of balance of payment, its trends in India. With that, you could able to conclude today's topic, so that tomorrow we can have a detailed discussion on foreign exchange rate, meaning, types, what are going to decide all these uh, merits and demerits of the foreign exchange rate, fixed, flexible, managed, floating, all these we can have it tomorrow. Even if time permits, today's topic also I will revise to you. My dear children, trends in the balance of payment, especially in Indian context. India's balance of payment quite unfavorable before 1991. I mean, before new economic reforms which were attempted in the 1991. The balance of payment, now we are in the favorable condition compared to earlier situation. In nutshell, I would like to share with you, my dear children, India's balance of payment evolved reflecting the both the changes in our development paradigm and exogenous shocks from time to time. In the 70 years of span, especially 1951, 2017, six events had a lasting impact on our balance of payment. In the 1966, what we did is devaluation, deliberately decreasing our domestic currency value, which encouraged, promoted exports, discouraged import and import substitution, protective foreign trade policy helped us. The second event is in the 73 and 80, due to Iran-Iraq war, we faced crisis because of getting the crude oil. And the third situation we faced in the 1990s, that already told you, that is a great crisis. So much of deficit in the balance of payment. Even after mortgage also we could have not able to get the loans internationally, and which situation compelled us to go for economic reforms. The fourth situation in the balance of trade disequilibrium, the Asian crisis in 1997. Not only India, total Asian countries faced that problem in 1997. After that, the fifth situation which we face is not only India, all over the world, Y2K problem, Y2K problem, isn't it? Everybody knows that event of 2000. Then next come to the 2008, that is global financial crisis. Not only to India, total all over the world, this was taken place. Especially share market collapsed in America, which affected all share markets, and that situation horrible. But we could able to recover after 2008 again. Okay, dear children, in this way, our trends of India's balance of payment took place. I hope you understood these today's topic, which we could covered in detail. That is, my dear children, in the today's topic, the first topic we were discussed about the international trade, economic development, terms of trade, gains from trade, that which we covered in the earlier class in the yesterday's. But today, balance of trade in detail. Second topic, balance of payment in detail. The third topic, we were discussed in detail about the disequilibrium of balance of payment. And the fourth topic is trends in the balance of payment in context with India. These four topics we could able to cover. Among these four, at least two topics will come in your exam. Get prepared, and as and when you have a doubt, you can refer your study material. Even I am leaving my mobile number also. While reading, if you come across with any doubt, you are welcome to ask your doubt about this second year, fourth semester economics in connection with public finance and international economics. My mobile number is 9966561796. 9966561796. Dr. Madhusudan. Okay, so my dear children, you can take my service and help to get score of more marks in the economics. I hope definitely you will become good laurel to the Department of Economics, Dr. B.R. Ambedkar Open University. So in this way, we were covered so many topics within a limited time. Tomorrow, we are going to have one more topic, that is exchange rate. that we are going to discuss. Again, I will revise you and I will help you to clear other doubts also. First, let me explain tomorrow exchange, foreign exchange, rate, types, causes, merits, demerits, exchange market in India. In addition to that, today's topic, which are I told you two topics, that is balance of trade and balance of payment differences, and how we could able to overcome the disequilibrium of balance of payment also we will discuss again tomorrow in the next class. Am I audible? Am I audible, my children? Am I audible? I think you know the question paper model also, which is already in your study material book. End of that book, it is given over here. You go through the earlier topics also, and as and when you come across any doubt, you are welcome to ask in the tomorrow's class is the last class. That's why I would like to tell you, my dear children, you can ask as much as you can to clear your doubts. As of now, in the first class on 26th May, we were discussed about nature, scope of public finance, principles of maximum social advantage, public revenue sources classification, canons of taxation, impact, incidence, effects of taxes. When come to the second day class, that is on Monday, public expenditure classification, principle, determinants, effects of public expenditure, public debt nature, public debt sources, public debt classification, effects of public debt, redemption of the public debt, that was covered on second class, that is on Monday. On third class, we were on Tuesday, we could able to cover fiscal policy and federal finance, budget concept, budget types, budget in India. That is on Wednesday, third hour, that is class 3, third class. And the fourth class, that is yesterday, we could able to cover, that is Wednesday, international trade and economic development, terms of trade and gains from trade. These were discussed yesterday. And today, this is the fifth day, fifth class.